the VIX is where we should be focusing our attention right now, because it's that uncertainty. It's not so much tariffs in and of themselves, but I think what's really rattling markets is this constant back and forth in terms of what the tariffs are going to be. And it's almost hourly that we're getting different reports on what we should expect in terms of tariffs on Canada, Mexico, and then even economies like Japan, China. It's constantly changing, and investors' markets don't like uncertainty. And so seeing the VIX spike, I think that tells you everything you need to know about the risk-off sentiment that markets have been going through over the last few weeks.
Yeah, but I mean, over the last 1 week, it's gained about 6%, though Friday was a very, very bad day for volatility, so down 6% for really the volatility index, the fear gauge, as we call it. What is your own read on the expectation the market is starting to price in of a swing from a rate hike to a possible pause to a possible rate cut, maybe many?
Yeah, so we're certainly seeing a lot more evidence that investors are worried about a recession, and they're worried about this hit to growth. You know, there was this Atlanta Fed GDP Now forecast. GDP for the first quarter went from a very robust positive number to a negative number over the course of the last week or so. And a lot of folks are looking at that and they're saying, well, there are distortions from some of the behavior front loading of shipments to get ahead of tariffs. But those distortions notwithstanding, there's a lot of concern that maybe this sort of uncertainty is going to lead to less hiring. It's going to lead companies to delay investment decisions. And so we could see quite a shift in terms of growth. And the Fed is thinking about that. You know, when Powell talks about being focused more on growth potentially than inflation, that's recognizing that there's a real risk there. And so I think that's being priced in terms of potential acceleration of rate cuts.
Phillip, Mandy joining in here as well on the same topic. President Trump declined to predict in an interview yesterday whether or not his tariffs would result in a U.S. recession. And this is, of course, a man who's very sensitive to market moves, or at least was in his first administration, and a man who's very sensitive to any perception that his policies are going to hurt the U.S. economy. What do you think of the fact that he's not even going to say, no, these aren't going to result in recession? Is there a seed of doubt there?
Yeah, well, I think he's been trying to prepare investors and voters for this short-term disruption. You know, we've gone from lower prices for groceries on day one to it's not my economy for 6 to 12 months. So there's a certain amount of kind of backtracking on earlier claims that this was just going to be smooth sailing, and a recognition that it could be a bumpy ride. But we've also seen these flip-flops sometimes in response, it seems, to a negative market reaction. So I think President Trump is paying attention to what the market's doing, and it's potentially guiding policy.